Hello, everybody. We'll get started with the webinar at this time. Give me a quick okay if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Just keep me updated if anything happens with the audio through the session. I'm using a new advanced quote unquote headset that actually has given me some technical issues over the past couple of weeks. So hopefully everything stays clear, but I'll keep my eye on the chat box in case we have any issues. Okay, so obviously based on the headline here on the slide, we're focusing on fundamental analysis, which boy, is it a great day to do that. With the news that's been coming out with US-China kind of driving everything, and also some news about Euro-US relations with tariff threats and the like. So a lot to look at as we go forward. As always, keep in mind, and I think we all understand this, all investments have risk. Nothing's guaranteed to bring profits. That's the case with any type of investment you're doing, whether it's real estate or this style of investing. Obviously, trading with CFDs when you're using leverage has a higher level of risk than some investments. So keep that in mind as you move forward. Forex trading in general carries with it risk. You can read the full risk disclosure statement on our main website. And keep in mind as we go forward that what we cover is meant to be educational in scope. I'm certainly not a financial advisor. What we go over is not meant to be financial advisement, but certainly is meant to add to your knowledge base, to help you in formulating your trading strategies with more information, better tools to use going forward, and information that's been kind of experimented with over years and years with thousands of clients, literally, that I've worked with. This is the sort of information that I'm sharing with you to add to your knowledge base, to hopefully either add to your current trading strategies, to improve upon them, or to start developing trading strategies if you're brand new to things, which I know some of you in the webinars are kind of brand new. Please ask questions as we go. There's no dumb question, really. I try not to use jargon or lingo that only experienced traders understand. I try to use basic words and information. If anything's too fast for anybody, please ask me to repeat. Also, don't be afraid to give input. It doesn't always have to be a question that you're typing in the box. Please give input if there's something you want to add for everybody to hear that you think is important, that you think maybe we're missing. Please do so. Add to the conversation. Don't wait to the end, as this slide might suggest, for questions and answers. That's fair game all the way through. Please interrupt me at any time in the chat box. Now, when we talk about fundamental analysis, we're talking basically about news, about information that's coming out, not the movement on the candlestick charts. That's the technical analysis. Fundamental analysis, we're looking at news, economic reports, that sort of information that's coming out. And we really can divide it into two main types of fundamental news. One would be regular economic events. That would be, and we'll take a look at some that happened yesterday, that happened today, that will happen later today. These are scheduled on an economic, schedule where you can look and see exactly what the topic is, exactly what time it will be announced, what the expectations are, what the last announcement was in terms of the numbers. Those are maybe a little easier to plan for in your trading because you know exactly what they'll be and when they'll be, and the relative effect that they're expected to have, whether they're high impact announcements, low impact, etc. The other type of fundamental news, which is maybe a little harder to prepare for, but still we'll work through some ideas of how you can prepare for the unknown. With this other type of fundamental news, you might refer to that as extraordinary economic events, such as what I already alluded to as we were getting started, the US-China trade war situation. You never know when an article is going to break about what Trump said or what what China has said, etc. Right? And the latest article I saw, there was breaking news about between the European Union and the U.S. with threats about tariffs. So this sort of information, while you can plan for it, and we'll talk about how you can, it's more of an unknown in terms of timing and scope than the prior type of fundamental news that we talked about with the regular economic events. So we'll go over both types. And if anyone has questions, please, as we go along, please ask. All right, so let's jump into the news right away. And we'll take a look, what's the latest fundamental news? And so, this is a main website, one that I look at often. It's not the only one. We can look at Bloomberg. We can look at Reuters. We can look at a lot of websites. I like to try and look at more than one source to get a balanced bit of information. Now, let's get a feel for the sentiment. How are people feeling about the market today? In one snapshot, we can get a feel of sentiment. Okay, which way is the wind blowing? Look at the headline that is most recently posted on investing.com. Stock futures slip as Trump signals delay in trade deal with China. Does that mean positive or negative? Do you think with that headline, would you go with the NASDAQ going up or against it going down? Yeah, negative. Right away, you can feel. Okay. What does this color mean, red? When we look at the futures, all of these indices, major indices listed, dollar index, everything's red. Is that positive sentiment or negative? Okay, real easy, right? Everyone's typing negative. Okay, it's obvious, right? You get a negative feel right from the beginning. Red down here, red, 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 red. Individual stocks, red. Indices, red. First headline you see, negative. Okay, so what do you think's happening with gold right now? Before even looking at the chart, would you rather trade up from a support line right now or down from a resistance level? Which do you trust right now? Do you trust the support level or do you trust the resistance level? Yeah, up, right? Support level. We're probably trusting the support levels now. If you had a preference, if you jump into your technical analysis now and you have two options, a perfect entry point off a support line ready to go up, or a perfect entry point against the resistance level ready to go down, which one do you trust more? With gold, probably up off the support. Why? Because look at all this red and negativity. People run to the safe havens typically during this type of sentiment. So this is the advantage of looking at fundamental news before you jump in. Let me ask real quick, if you were trading on the Australian dollar, would you go up or down? If you had to flip a coin and say, okay, I'd rather go up or I'd rather go down with the Australian dollar, which would it be? Paul, you said up. Jonathan, down. Chris, down. Jennifer, unsure. Okay. A number of you are saying down. Yeah, I'll go with down. Why? Who does Australia sell their number one exports to? Who's their number one buyer? China. Yeah, China. So many people say as China goes, so goes the Australian dollar. Okay, not always, obviously. There's never 100% in trading. But there's a strong correlation between how's China doing and how is the Australian dollar doing. And so if there's bad news about US-China having a trade deal, right, that's probably bad news for the Australian dollar. So before we even look at the chart, and I promise you, I didn't look. I didn't have time. I was busy with a client. I did not prep for this webinar for a long period. I just got things up and running. We'll look at the chart, see what the Australian dollar is doing. Probably dropping, okay? And like I'm saying, probably gold's going up as well, okay, or went up. Okay, so we get the idea here. We're trying to find fundamental connections to the assets. What do you think oil's doing with all this bad news? Is that good for oil or bad? If there's bad news for the global economy, does that usually help oil go up or down? Yeah, probably down. So we're getting an idea before we even look at the technical analysis, what direction we might prefer to trade. Okay? Major indices. Indices are great. They're very predictable when you have big driving news like this. Indices are very easy to trade on. Okay, you've got the stability of having dozens or hundreds of companies to stabilize the movement, and they represent such a large portion of the overall economy of major nations. These major indices like Dow Jones, S&P 500, etc., the CAC 40 and the alike, that they tend to be very predictable when there's big headlines like China, U.S. having problems with their deal. Okay, so let's check another source. Let's check Reuters. What's Reuters saying? First headline I see: France and EU say primed to retaliate over U.S. tariff threat. Does that sound like good news for the market? Retaliation over U.S. tariff threat? What do you think that does to gold? Yeah, probably people are running to gold for that reason too. And so what do you think that does to European indices? What do you think that does to U.S. indices? What does that do to individual stocks? What does that do to the strength of the euro if you're trading with it? By the way, if you like to trade currencies, if you think that would cause the euro to weaken, what would you pair it against? What currency is a safe haven currency that should probably strengthen as gold strengthening? The yen. So if you do euro yen and you think the euro is going to weaken, pair it against the yen, which then probably should be strengthening. You want to pair the weak horse against the strong horse, as you see it, right? Not as I see it, as you see it. Don't let me tell you. If you feel the yen should strengthen as a safe haven with all these negative headlines, and you feel the euro should weaken, then there you go. Okay? Or maybe you pair the Australian against the yen. Okay? Maybe even more reason for the Australian to weaken. Or diversify. Half your move on Australian yen, half your move on euro yen. Okay? Smart trading. Okay, so what if we go back and we look at economic announcements? Because so far we looked at the extraordinary type of fundamental news, the stuff we couldn't predict, breaking headlines. What about the scheduled economic calendar? Let's look. And there are lots of platforms you can look at the economic calendar. This is just one of them. I like this calendar because it tends to show more of even the minor announcements, and I like to see all of them. So what did we have happen today? We started out flat. You can see the forecast is here, and the actual number is here. Sometimes there's not a forecast number. Sometimes there is. If the numbers are better than expected, they come in green. If they're worse than expected, they come in red. If they're major announcements, there are 3 bullheads. If they're smaller announcements, there are 1 bullhead or 2 bullheads. Okay? So we saw some mixed news, positive news out of the European Union and Great Britain. That was earlier. That helped move the euro and the pound up, right? Then all of a sudden, this headline breaks about bad news between U.S. and European Union about tariffs. So if the euro went up with this good news here, boy, what a great entry point if you expected it to drop with the bad news then, right? So you can start to see, if you look at this stuff and the timing and you're on top of it as it's happening, you can really get choice entry points, okay? Doesn't mean we're too late now. We can still go back and go with the flow, okay? Ride the wave, so to speak. So yeah, that was a high-level announcement here. Construction PMI out of Great Britain, positive. What about the South African rand? Boy, the South African economy's had its issues, right? Bailouts and all kinds of problems going on there with maybe the utility company and some things where the South African rand has had some trouble. Now look, bad economic announcements, 2 of them. Instead of being 0.1 to the positive, the GDP was negative 0.6. Okay, shrinkage of the GDP. What do you think that does to the strength of the rand? Okay, so if you like trading on the rand, boy, find something to pair it against that you think should be strengthening today, and you might have yourself something, right? Might be hard to find a currency you think should strengthen today, though. There's bad news for the USD. There's bad news for Australian dollar. There's bad news for the euro with that latest headline about the tariffs. Maybe the pound is still bullish, because I didn't see any negative headlines about Great Britain. And there's, I know they're part of the European Union technically still, but they're kind of separating. And their announcement here was positive. on a high-level announcement. So I still feel the sentiment might be a little bullish for the pound today from this announcement. But certainly not for the rand, maybe not for the euro anymore because of that headline about the tariffs. And let's move on. Brazil has some positive numbers if you like to trade on some of the exotic currency pairings. And the Singapore dollar had a positive announcement. Okay, so there's the general consensus. Negative feel overall in the market, maybe some positive news for the pound. Everything else pretty flat or negative. Pretty simple to get a read. Okay, so now we go to the chart and we try and pair up our technical analysis with a good entry point. Okay, as expected, look at the Australian dollar. Okay, these are 30-minute candles. What happened to the Australian dollar over the last 4 hours? Down, right? Down like a rock. Why did that happen? The article came out several hours ago. If you were paying attention, you could have already traded on this. The article came out about, well, here, let me show you. If anyone joined late. Let's go back to the main headline. Stock futures slip as Trump signals delay in trade deal with China. Okay, that information was leaking out for the past several hours. Okay, and so, and really yesterday we already had a read on that, to tell you the truth. Okay, and so we're looking at this came crashing down. What you could have done is even saw that headline half hour late, an hour late. That's okay. You see the downtrend start. If we go to 5-minute candles, you could have said, okay, here's a high point. It came down. It shot back up. You could have drawn a support level here and said, okay, if it breaks the support, I'm out. If you were in on a buy for any reason earlier. You also could have had a pending, what kind of pending order would kick in if it broke the support to sell as it broke this support level here? If this came down and broke the support, what kind of pending order sells? Yeah, sell stop. Okay, sell stop. Very easy to set up. Why am I pairing it against the yen? Australian dollar should weaken with bad news out of China. The yen should strengthen with bad news out of China. Look at this is a classic breakthrough candle. You might say, why would I trade after it already dropped? And the answer is confirmation. Confirmation of a downtrend by breaking the support. Okay, it easily could have bounced back up off the support. But why did we not trust the bounce? The fundamental news told us negative. It took us literally 5 minutes, 2 minutes, when we looked at that first page, that first web page, to see everything was in red and the first headline was negative. Right there, we knew. Bad news for China and good news for the safe haven. Bad news for anybody attached to China, which would be Australia. Okay, so in 2 minutes, you could have saw that. If you're checking periodically through the day for headlines, you don't have to check. Those two websites would be fine. Every couple hours, look. You would have saw it. You would have known why this was crashing down. Crashing down, you could have gotten in either on a market move or with a pending order as it broke the support. Okay, even with getting in late, after it broke the support, you missed all of this drop. No problem. You get confirmation of a broken support and you get in here. That is at 74.70 approximately. Where are we at now? 74.34. Folks, that's 36 pips of profit in just a couple few hours. Okay, 36 pips. You know, 20 pips a day is a nice average in a whole day. To average 20 pips profit in each day through a month. To get 36 pips in one easy pending order based off of fundamental news, I think it's worth checking the headlines at set intervals through the day, every couple hours to get in on these. It's right now, China and US are driving and tariffs are driving the market. And it becomes so predictable, so easy to follow. Again, no guarantee, right? You could have had your pending order here, could have came down, tripped it, and went back up and hit your stop loss back above the support. Okay, so you didn't risk much. Set your next pending order. The next time, probably it breaks and you get the big breakthrough candle. You see the difference on a breakthrough candle compared to the others, right? Look at the momentum it took to break this support. Look at the momentum it took. And the candle is much bigger than all the prior candles. That is a classic breakthrough candle of a support level, driven by fundamental news. Type OK if you're with me so far, or questions if you have any, or comments. Okay, very good. So if we look at a chart of Australia USD, it's not as dramatic. It's still, the Australian still dropped, but not as dramatically. Why? Because the USD had reason to weaken also. It was bad news for the US also. So it's important to have your pairings mean something. Don't just by habit always, if you're trading on Australia, do Australia USD. I know maybe the spread's a little tighter on Australia USD compared to Australia JPY. Honestly, I don't care about a half a pip spread difference if I'm going to make 36 pips in the movement. And the movement on Australia USD might have only went 12 pips. Right? Because the USD had reason to weaken and the yen had reason to strengthen. So I'm pairing the weak horse against the strong horse. Okay? You don't always have to trade the majors. Euro USD, it's okay to trade the crosses and sometimes the exotics. Okay? If the profit potential's there, it's worth trading on something that might have a little wider spread. It's okay. You're managing your risk still. You put your stop loss where it makes sense. Take the trade size that makes sense for you, etc. Okay? If I traded one lot with this one move, one lot, what do I make? Each pip's about $10 value on a one lot position. It dropped 36 pips already. I would have already been able to get out with 360 profit in one little move, right? So, you only have to gain 1% on your account a day to make a 20% profit every month. Average 1% gain per day. And people think, well, that's so small. I want more. Extrapolate over the month and the year. 1% gain a day, 20% gain in a month then. If, trading days, there's usually about 20 trading days in a month. You're doubling your account. If you're averaging 1% a day, 20% a month, you're doubling your account, what, in 5 months? Even less because it's capitalizing on itself. So you don't have to be in such a hurry to gain 5% in one move. Take the trade sizes that make sense for you. If you want to try and gain 5% on your account in one move or 10%, by all means, that's your choice. But what I'm pointing out here is you can take a lot of shots at moves like this. Be wrong on, if I had my stop loss back up here, only 4 or 5 pips up, back above the support, as it broke the support, even if it went up and I lost, and I tried it again on another move, it went up and it lost, and I tried it again, and it finally won. I could win 1 out of 5 times and still profit on a move like this. I don't have to be even above 50% to profit. And guess what? If you do this correctly, you probably should be above 50%. And now look at how much you're profiting. If you can profit being right 1 out of 3 times, imagine if you have these moves and you're right 50%, 60%, 70% of the time. Now you're really increasing your profit without really having to risk a huge amount on any one move. Okay? So something to keep in mind. If I pull up gold, let's take a vote. Is gold climbing or dropping right now? This is the power of fundamental news. You know which way to trade without looking at the chart. And then looking at the chart gives you entry point. Your technical analysis then isn't about direction, it's about entry point, because you've already made up your mind which way the market should be moving based on the fundamentals. Okay, so let's look at gold. Hopefully it pulled down. It didn't. If gold pulled down, what would you want to do right away with the news that's out there? Yeah, exactly. It's a safe haven, it's climbing, it was predictable. Let's walk through how easy the money to make would have been. If you saw the news come out, okay, these are 5-minute candles. That news came out hours ago. If you saw the news come out, okay, here's your first opportunity. Here's your resistance point. Resistance, and it drops. Okay, you with me? It came up, resistance, and dropped. If you saw the bad news, what kind of pending order, again, could I have put above the resistance? I don't have to take a market move. I can wait for confirmation. I saw the bad news. I see the resistance level. I say, listen, if it breaks the resistance, then it must have really been bad news. What kind of pending order would I put above this resistance? Buy stop. Okay, there's one winner. It broke the resistance. It hits your buy stop. It goes up. As it consolidates, if you're scalping, it started to move sideways. Boom, take your profit. If you're a patient trader and you think it'll go all day, which it looks like it is, then you don't close it. It's up to you, right? Some traders like to get in and out, in and out. Others stay with it. Either way is okay. I'm not telling you one's better than the other. But as it went sideways, you could have closed. Or let's say you missed that opportunity. You missed the first breakthrough. You saw the news. You came and it already broke through. And you say, oh, man, it broke the resistance already. I missed it. Guess what? The day's not over. Check the headlines. As long as they're all still negative and everything's in the red, go with the fundamental news. So it formed a new resistance right here. It dropped back down to the old resistance, which is now support. It makes sense. It dropped down to the old resistance. That becomes support. It goes back up. Look at this. It broke the resistance again. Again, what kind of order could I have put right here? Saying, okay, if it's truly bad news, it should easily break this resistance and climb again. So again, I put another buy stop. And again, what happened? What do we call this kind of candle? When it breaks the resistance and it's larger than the other candles, what's that called? Yeah, breakthrough candle. Exactly. So you don't have to get in at the low point to make money. It's okay. You could have. If this came down to this, what is now support here, this broken resistance becomes support. That's support and resistance theory. Sure, that was ideal. You could have done a market buy. You could have said, I trust the support. There's bad news on the market. Boom. I'm in a hurry. I can't click buy fast enough in that situation, honestly. You don't have to agree with that. I'm certainly not here to tell you what you should do. But if the fundamental news, you believe in it, and you get an opportunistic entry point in your eyes, boom, you can do a market move. You don't have to wait with the pending order. If you miss that entry point, you say, okay, if it breaks this resistance, I'm in again. And look how much it climbed after it broke the resistance. You still gained. Look at all this climb. Look at all that climbing. Then guess what? Consolidation sideways. What do you do when it consolidates if you're scalping? If you're scalping, the breakthrough candle dies, it's consolidating sideways, take profit. Sure, why not? Again, it pulls back down, forms a support. Forms a support. Do we trust the support when there's bad news? Do we trust the support on gold? Or do we think it'll break through in the other direction? I would trust the support if there's bad news. Check the headlines again, always. Go back, look at the major headlines, see if anything changed. If it didn't change, boom, trust the support if that's what you feel. And look what happened, you're profiting again. Or let's say you missed it. You missed the support level and it already climbed. Here's the resistance level, resistance. What did we prepare up here again? Above the resistance? Buy stop. And again, did it work? Did it work? It's working right now, right? This is the live one. It just broke through while we were talking. It broke through while we were talking, everybody. It's live action of a profiting strategy, okay? Now, as it consolidates and starts to move sideways, you can take your profit if you want. And you know what? The patient guy that got in down here and said, nah, I think this will go all day, look how much profit he's in. That's okay too. You know, you can do both. You can open some that you say, okay, I'm going to be patient and hold it through the day. And you can scalp through the day as well. Open and close, double up, triple up your profits if that's the style of trading you like. Okay? Any questions, comments at this point? Let me take a breather. Rehan, well said. I don't know if everyone can see what each other's typing. He said it seems you can't purely rely on price action and technical analysis. You also should know fundamentals along with it, and I agree wholeheartedly. Technical analysis takes you so far, and yes, there are purely technical traders that can profit. But you know what? You can see in front of your eyes how you can profit better and avoid false signals by combining fundamental analysis with it. We're not even wasting our time with a false down move when we know the fundamental news is driving it the other way. It becomes very, very simple, okay? Why might I look at maybe the 1 hour, the 4 hour, the 1 day candles right now to determine how far I think this will go before it might pull back? What can you see right now over here? You don't see any resistance. If I start looking at larger candles, what might I see? Yeah, exactly. I might find a major resistance level that might be more significant and stop this bull run. And you want to be aware of that, technically speaking. It means something. Usually, even if there's strong reason for, let's say, gold to keep climbing, if I find a resistance level that hasn't been broken for, I don't know, a week or 2 weeks, even if temporarily, when it reaches that price where it's dropped from recently, you'll get a pullback. Then if it's truly strong news, it'll test it again, test the resistance again, and then you set your sell stop if you think it'll break. And boom, if it breaks that major resistance level, the more major it is, the bigger the breakthrough candle typically once it breaks. But if you're looking for a spot where you might get out with this current bull run, finding that next resistance level is a spot where it's probably somewhat likely to slow down and even pull back temporarily. Okay? So when you get in, when I'm talking about entry points with your buy stop pending orders or with your market moves, if you catch it when it dips back down, those are entry points. You also should know, where do I want to get out? Where should my exit point be? Because that's just as important. It really is. So let's do a test. 30-minute candle. Do you see resistance? I don't. Not on the 30-minute candle. 1 hour candle. Ooh, I start to see resistance over here, right? It looks like it broke it already. It's above it. We need to go to 4 hour candles. Now we find it. Okay, it broke this resistance level here. So this is really strong news. It broke the most recent resistance. It flew right through it. No pullback. Okay, so where's the next one? Right here. This is the next resistance level. It's more significant also. Let me draw the line. You see that? Because this was resistance here. Once, twice, it broke above and right back below. 3 times, 4 times, 5 times it tested this price line and then never went back above. It dropped down. So as this is climbing, as it gets near this resistance level, right here, 1475.72 is what I'm reading here, give or take. That might be a spot where just before it gets there, maybe $1 before that, or $2 before that, or $1.50 before that, right? It's your choice. It's already within $2 of that almost, right? You might start to say, listen, that's a spot where technically speaking, it looks like there could be a pullback. It might not, right? But if you think odds are it's going to slow down there and maybe pull back, you can take your profit just before that, right? If you already gained $10 in climbing, you could close now because it's only $1.50, $2 from that resistance right now. Okay? Or type yes if you know how to do a partial close. We can easily do a partial close. Type no if you don't. You could close like 2/3 of it and leave 1/3 open, guaranteeing that you've profited then, even if it dropped all the way back down. If you close more of it than you leave open, you've got a nice profit no matter what happens, and you leave some open in case it breaks through if you think that's what's going to happen. That's one option. So let me open a trade. I'll open for, I don't know, one lot, buy position. Okay, let's pretend I'm in profit. Let's pretend it climbed up. And I say, okay, I want to preserve some of my profit. So I could go in here. I could say modify or delete, switch the open order to market execution, and I can change the volume 0.25. Whatever I put in the volume now for this order number, that's the amount when I click close, that's the amount it will close. It'll leave the rest open. So I might say, okay, let me close 2/3 of it, 0.66. Now watch, my open position will change from one lot to 0.34. It closed the amount I told it to close. So if I was in profits, I just preserved much more profit than what I have risk if it drops down. The third that's open still, even if it dropped all the way to my entry point, that third didn't lose me anything because now it's breaking even. And I keep all the profit from the other 2/3. Okay? So this is a way, as it's more and more likely in your mind to pull back, you can start the profit take. You don't have to close all of it if you want to give yourself a chance that it could break through, if you think it's that strong of a movement. Another option is a trailing stop. You can leave it all open if you want. Rayhan, yeah, a lot of people don't realize you can do the partial close. And that way it doesn't cost you more spread. If you close the whole thing and reopen, right, you're paying spread again. If you close part and leave part open, you didn't have to pay more spread. Our spreads are pretty tight now anyways. We lowered a couple weeks back by like 30% across the assets, and we don't charge any commission. So we're actually, I think, ahead of most all the competition now. You know, we really pride ourselves on support anyways. Most of the brokers out there aren't leading webinars like this or giving you account managers to work with every day. But so listen, what's another option? Besides closing part early, type yes if you know what a trailing stop is, or no if you don't. Trailing stop is important to understand some things about it. Let's say I want to put a trailing stop on the rest of this so I don't lose all the profit that it has, so that I only risk a certain distance. Okay? You right click and you go to trailing stop, you pick the number of points that you want to put the trailing stop back. Or you can do custom. I can put a custom distance. Okay? Once I activate, let me put, I don't know, 200. Once I activate the trailing stop, it stays active only if I stay signed in. If I log out or if I lose my internet, the trailing stop's gone. So I probably want to back up to put a regular stop loss on it in case I lose my internet signal and the trailing stop disappears. Now I'd be unprotected, right? So if you like to trade with a stop loss, you also can put the trailing stop along with the regular stop loss, having the regular stop loss as a backup. Okay? The trailing stop is client side. It's not server side. And look, gold is still climbing. As late as I got in, I already moved past the spread and into profit a second ago. Okay, there's profit. Here, let me take some profit. There, I just made $5. Had I left the whole thing open, right? If I wasn't pretending I was already in profit, I'd be in an even bigger profit. So it's starting to approach this resistance level. Okay? Climbing the whole time we've been talking predictably, right? Okay, so trailing stop is nice. The thing about the trailing stop is if you log out, anything like that, it disappears. And let me open it again. Let me add the trailing stop again. This is why I use a demo account, folks, because I open and close like crazy while I'm teaching. If I activate a trailing stop, when I look here under trailing stop, you see the check mark. That means it's active. You see the check mark, okay? So I can confirm, yeah, it's still active. Again, back yourself up with some other form of risk management as well with that trailing stop. Okay, if it breaks through this resistance level, our next resistance level isn't until here, right? Right here. And that is all the way up at 1478, another $3 or $4 or $5 up, right? So this is how you start to decide, where do I want to get out of a trade also? And it's really a personal decision, how patient you want to be. Do you want to close some early? Do you want to put a trailing stop at some point to preserve the profit? The way the trailing stop works, if you're not familiar, it follows the movement up. It follows the high water mark. So the further you move into profit, that trailing stop moves with you and always stays that same distance back, preserving the rest of the profit. And then if it ever goes back that trailing stop distance, then it closes your trade, preserving the rest of the profit. Whereas a standard trailing stop stays all the way back where you first put it, allowing the whole profit to disappear. Okay? All right, great. What do we think is happening with oil? We already said dropping, right? Let's look. Yeah, look at that. Straight down like a rocket. You could have been doing the same thing here, trading down on oil. Support level here, broken support. Every time it came to a high spot on this slope, you could trade down because it's a downtrend. High point, trade down. Low point, get out. High point, trade down. Low point, get out. And it's dropping so fast, it's not even coming to high points right now. Okay, so why is it predictable that you should not have trusted support levels on oil? Fundamental news. Same reason it was predictable gold would go up. It was predictable that support levels on oil would break. Very easy to trade when you got the wind at your back, so to speak. Not trying to fight the market, going with the fundamental news. Now, at some point, this will stop, and you'll get a big pullback, okay? So as you're getting into a movement like this, always think about covering yourself if it eventually reverses the other way, because trust me, eventually everything reverses the other way. The idea is take advantage of it while it lasts, limit your risk in a way that makes sense to you, and go after that profit. Take it while it's there. Go after it while the news is fresh, okay? Indices, Dow Jones, plunging like a rocket. Simple sell stop strategy. Here's your support level, support, it broke, trade. Draw your support level. So you think you're too late, that you missed the movement? Nah, not if the news is still there. Support, breakthrough candle, another profit, okay? And there's no reason why you can't do it again, right? Look what's happening. The market is so predictable. Look at the size of these moves on the Dow Jones, on the NASDAQ. We're talking 27,776 to 27,540 right now. That is $200+ drop in the value of the Dow Jones. If you had a one lot position on Dow Jones right now, that's 10 indices, you just made over $2,000 with this simple sell stop right here. This sell stop, okay, made you 1,000. Even getting in late with a basic technical analysis strategy, sell stop below the support, going with the bad news, take a shot, limited risk. If it activates your sell stop, stop loss back above the support, okay, I could be wrong, I'll go after a nice profit, boom. Another $1,000 profit on a one lot position. Now I say one lot, I don't mean, I'm not telling you to trade one full lot. You can trade micro lots, you can trade bigger, smaller, whatever's right for your account, okay? And your level of aggressiveness and style. But what I'm pointing out is how easy with assets like gold, oil, indices, how predictable they are. Indices especially, because you've got a number of companies in here across the greater economy, in this case in the US, because it's a US indice, and they're responding to this big global news. Very predictable. Okay, any questions on anything? I think this is a good spot to stop, by the way. I like to keep things simple and not cloud things with too many assets. We saw the Australian dollar plunging against the yen. We understand why. We saw gold breaking through resistance right while we were predicting it or saying we thought that should happen. We see it happening. We see oil plunging predictably before we ever look at the chart. You see the power of fundamental news. Okay, go with it. Understand these movements will end eventually. Eventually, one of your last moves will lose. But while it's happening, you can take advantage of it until it's not happening. Okay? And always have a checklist. Check the latest headlines right before you trade. What's the latest news? And then go with what you feel should happen with proper technical analysis along with it. Okay, any comments, questions before we end things? I'm glad you enjoyed, everybody. We'll be going again tomorrow, a little earlier in the day, and Mondays each week are later in the evening, 6 p.m. London, Dublin time on Mondays. That's the later session. Feel free to register for and attend any and all webinars. We're always looking at what's happening live in the market. And you know, one of the webinars focuses only on cryptocurrencies, and the others are on whatever's happening. And those links that we email out, you can save them. I add new dates to the same link. You can register for any webinars as the new dates are added. By the way, I got a YouTube channel created with a section for English webinars. All these webinars today, this webinar is being recorded and will be posted within a few hours. The late one on Monday is posted by the next morning. So if you miss the live session, you can catch them while they're still relevant, 12 hours later less. You can catch the session and see what it was about. Okay? All right, great, everybody. Thank you for attending. Until next time, good luck with your trading. Bye for now.